Hi everyone, this is Dr. Marco and this is Ev Mclean. I'm going to be interviewing her today just to give you some valuable information. So Ev is an insurance broker as well as a financial planner, and she has some good information to share about things that are important to kind of take control of in your life, that kind of thing as well. So we're going to be talking a little bit about insurance plans, how people can get coverage for chiropractic if they don't have it at their workplace, that kind of thing. So let's talk about that a little bit.
Sure. If you are an individual who doesn't have group insurance at work, you can do private health insurance, but it really doesn't cover a lot in terms of paramedical care, which is chiropractic, massage therapy, naturopathy, chiropody. The plan only covers about $400, but it's for all of them combined, where most group plans will cover $400, $500, $300 for each one of the paramedicals. If your company doesn't have a group insurance plan, then I would be very happy to speak to your human resources individual to talk to them about group insurance. Group insurance is a taxable write-off for the company. So it really does help the company. What a group plan does is it just inspires loyalty for their employees. The employees do pay for part of the plan. It's a benefit actually to the employees to pay for part of the plan. And not only that, but as I said, it inspires loyalty. People will prefer a health benefit rather than a raise. You never know when you're going to get sick and you're going to need a lot of prescription medicines, or something happens where a group plan will help pay for and defer some of the costs. And I can speak from personal experience where I had misdiagnosed with rheumatoid arthritis, was actually Lyme disease, but because I wasn't part of the group plan at the time, I was spending about $300 a month on medication. And that takes a big bite out of somebody's pocket. I do have a client who left his company because they dialed back on their group benefits. He became a diabetic, and he's spending over $4,000 a month on medication. So he left a job that he loved to go to another company that had a group plan in place.
Mm-hmm. Yeah, so it's a pretty important thing just to cover your bases, basically. And so if any of you are my clients and maybe you're you work in an office or something and there isn't any benefit package, maybe you should give Ev a call. Can you give them your contact information?
Sure. As I said, my name's Ev Mclean, and you can reach me either at my office, 416-491-7400, extension 582, or you can always reach me on my mobile, 647-308-8660, and I'd be very happy to talk to you and explain things to you, or if you want to direct me to your human resources person, I would be very happy to do that as well.
Very cool. Good. And the company, your parent company?
My parent company is Investors Group Financial Services and Insurance Services.
Okay. How long have you been with them?
I've been with them about 4.5 years. I've been in the investment side of the business for over 35 years. Nice. And doing insurance now for 4.5. And as I said, having been around as long as I have been, I see the value in insurance. Not only in group, having a group policy is integral, especially on the disability side, which is what you get with a group policy.
Yeah, and a lot of times I've done a lot of studying too, and they said even though you're spending money on, let's say, a disability, you should almost think about that as paying another employee for your company, because it's sort of like if you do have to utilize it at some point, then you've been paying that employee that's going to cover you when you're not there.
Well, yeah, it's income replacement, and God forbid that something does happen. And again, I had a client who slipped on some ice, broke his leg, that got infected. He slipped on the ice in January. He didn't go back to work until mid-July. Everything that could have possibly gone wrong went wrong for this poor man, and the only thing that kept him going was his disability policy, because it replaced his income because he couldn't work. And if you don't work for 7 months, not too many companies are going to pay you not to work.
Cool. So can we just sort of talk maybe about 3 different types of people and what you think they should have as a base minimum sort of thing? So let's say somebody's just like my age, 30, 40 years old, whatever it is, and they're just an employee. What insurance package would you say that would be the bare minimum that they should at least have?
If you are working for a company, the bare minimum that you would want would be at least health care, which covers your prescriptions, whether there's a deductible or not. You want long-term disability, so that's income replacement, and it will replace about 2/3 to 70% of your income if you do are incapable of working for any period of time. And on top of that, it's government mandated that there's going to be some sort of small insurance policy, but if you do have a family, insurance is very important because it helps your family live if something does happen to you. And this is a really sad case. About a year ago, there was a family driving on the 401 to go to a kid's birthday party, mom, dad, and 2 kids in the back. A woman changed her mind. She was going to go on the express. She didn't. She clipped the van. The van rolled. The father died. The mother was in the hospital for 3 months. She shattered both knees, broke her legs, broke her hip. The kids were taken in by the family, but because this man was self-employed, he didn't have any insurance. They've had to sell the house, and they didn't know how they were going to pay they had to use fundraising to pay the medical bills that were over and beyond what OHIP pays for. So if you have a group plan, it will cover almost all of that.
Very important, yeah. And if somebody even goes into bankruptcy, from my understanding too, if they have a life policy, they actually can't touch that. That's the one thing they can't really touch.
They can't touch it as long as your beneficiary is either your spouse or your children. Mm-hmm. It has to be a linear family,
right.
Nuclear family.
Nuclear family.
Right. So the creditor can't touch a whole life insurance policy.
Very cool. So that was one age group. Let's say somebody's older, like I have some of my clients are like retired and stuff like that. Is it too late to start thinking about this? And, is it way too expensive at that point? Or?
If they're retired, if they're over 65, they're on our version of Medicare. Mm-hmm. So they are covered. If they've already retired, can't do anything for them. If they're, let's say, a teacher or somebody who's leading a group plan, they can go on to another plan, but you have to sort of weigh what the costs are versus what is covered by the government.
Right, right. Because it's one of those things where as things get on, if you haven't already taken care of it, it gets a little more challenging.
The younger you are when you take on insurance, the cheaper it is. Mm-hmm. And once you lock into a premium, that's a premium you pay for the rest of your life. But as you get older and you decide to take on insurance, whether it's life, critical illness, disability, the more expensive it gets.
Okay. Just for my curiosity, critical illness is usually like an add-on to a disability policy, is that correct?
They're 2 separate things. A disability policy replaces your income. So if you are hurt, incapable of working, then it replaces your income. A critical illness policy is if you receive a diagnosis, and the 3 common ones are life-threatening cancer, heart attack, or stroke, but most policies also will cover Alzheimer's, MS, Parkinson's, major organ transplant. And if you survive a diagnosis of 31 days, the insurance company gives you a check. And you can use that check for anything you want to do with it. You can take that check and you can take your family around the world. You can use that check to pay for, what it's meant for is to pay for the little things that our health care system doesn't cover. Excuse me. If you were given an option of, here's a drug and it has a 70% chance of survival and it's covered by OHIP, or you have this drug and it gives you a 90% chance of survival, it is approved by Health Canada, but it is not on the coverages of OHIP, but it costs $12,000 a shot, which are you going to take? You'll probably take the one that gives you a 90% chance of survival, and that will either mean you have to remortgage your home, it means you might have to take money out of your RSP, and the other things that you don't think about when you get sick and you're in the hospital. I used to visit my mom in the hospital, $4 every 20 minutes for parking. One of my clients spent $4,000 in a year. She had a carcinoma, she had to have her leg amputated. The family spent over $4,000 on just parking. She spent $1,800 to get a wig because the cancer treatments, she lost her hair, and most of our women, I have to say I'm probably one of them, would not want to wear a scarf for a few months until the hair grows back in. She had to replace all her shampoos and her skincare stuff to something that was hypoallergenic because the skin became so sensitive. So all these are things that are not covered by OHIP, but they start to add up. If you have treatment that needs to be, if you want to be sort of jump the line and have treatment in, let's say, India or Brazil or the States, you can take your critical illness money and you can use it for that. And so, as I said, the insurance company gives you the check, you decide how you want to do something with the check. You could pay for your mortgage if that's what you wanted to do.
Right. And so the amount of that check, does that, I guess the premium will vary on how big you want that check to be certain?
You can make it anywhere from $10,000 to $2 million if you want, and I'm sure we can do higher than that depending on the person's, what their income is and what their lifestyle is.
Right.